So let's start on the positive. Each of you, I want to ask, what is the single strongest reason you have to believe that this gold market is real? If you had to identify one thing, what's the single reason that you have to believe that this is a real gold market?
Okay. Oh, me?
Yeah, I mean, you're right here.
Negative interest rate environment.
Yeah.
I mean, I threw up a chart back to 71 in my presentation yesterday. It's one of the most, if not the most reliable correlations between rising gold prices and negative real, that is, inflation-adjusted interest rates. We've got negative rates virtually everywhere. They're kind of around zero in the U.S., but virtually all other currency blocks are negative. And certainly for the rest of those currency blocks, I really don't see how they're going to get back to positive soon. I really don't know how they're going to engineer that. I wish I did. But
Yeah, I know.
I think that's here for a while.
Gold moving up, currencies, in other currencies, gold moving up dramatically. Over 70 currencies, all the major ones. I agree with Eric too, the negative rate environment is very bullish. And you start adding a bunch of multiples reasons, and it gets real powerful. Yeah.
John?
I would say it's that Trump has set the United States on an irreversible course of forfeiting its leadership role since the end of World War II. And even if he doesn't get reelected or anything like that, I think it will be very difficult to return to status quo. So I'm bullish about gold because I see the world going into a very dangerous flux where we have no idea how things are going to play out, who's going to be assertive or aggressive, who's going to be the winner and loser, and gold is really the one thing that everybody anywhere in the world can run to fend off against this uncertainty.
Yeah, cool. I mean, those all make a lot of sense. I think the aligned with the negative interest rate thing, the bond market being so completely screwed up just amplifies all of this and erases most of what people would often do faced with uncertainty, faced with political uncertainty, economic uncertainty. It erases the go-to option, bonds. They don't do the job they're supposed to do anymore. So gold's sort of the only one that's left standing there. To take the other side of the position, what risk do you see to the gold market right now? And if you want, you can just answer that in the short term. You can talk about how this market might evolve, but what risks do you see ahead for the gold market?
Well, the main risk, and it's sort of two risks that are intertwined. My sense is that a lot of guys in the bond market are convinced that they're going to tell Powell what to do. Certainly Trump is convinced he's going to tell Powell what to do. and there's a lot of guys out there talking, zero interest rate policy. The Fed's going to take it down to zero. I'm not yet convinced that's going to happen. I mean, I'm not sure it even makes any sense, but a lot of people just think it's a done deal. I don't think it is. And combined with that, intertwined with it is, I think the biggest risk we're in one of those sort of static equilibrium markets where things look sort of calm, but they're really not. There's massive forces pushing in different directions, and it's a kind of market, and John was sort of just speaking to that, where you get into this kind of market where a policy error things can go bad fast. And the biggest risk, I think, short term, and it would be a risk to the gold market simply because gold traders dominantly think of gold in US dollar terms because it is the world's reserve currency. I think there is a danger of one of the paths forward being a very hard, strong run in the US dollar because of there is a sort of a dollar shortage out there. If we saw the dollar for reasons completely unrelated even to anything political, mainly to do with stuff going on in the bond markets, have a run, to suddenly, for the dollar index to suddenly go from 98 to 110 or something like that. I still think gold would be fine in the longer term, but in the short term, I think things could get pretty choppy.
Yeah, that makes sense. John?
The biggest risk is that there's some sort of a technology or energy miracle that happens which creates a massive boost in the productivity of the economy, giving equities the reason to go substantially higher than they are right now. In other words, very, very little risk.
That was, first of all, that was the most concise answer that John Kaiser has ever given to a question in his life, and it was a pretty cool answer. Greg, do you have any?
You know, I've learned over the years, whenever the gold price is running, never underestimate, as I call them, the PTSB, the policymakers, what they can do. You just, these guys can pull rabbits out of hats like we've never seen, and they always have some creative wording, quantitative easing, or whatever they call it. They always come up with a new term to describe how they're gonna, you know, skin the rabbit, you know.
Yeah.
So.
For sure. I think there's also the recession risk broadly is obviously rising. I'm never one to try and predict when that might happen. Obviously, if it does happen, you know, there's the baby in the bathwater scenario. So while the gold price might do one thing, gold equities obviously get impacted by that kind of situation. So there's lots of things that could crop up that could create a lot of volatility in the space as we go forward. I think another risk for gold investors is just not having enough confidence, because we've all been through such a long, hard space here, that we might try and get a bit too clever in trying to buy, you know, wait for a correction and buy when one doesn't crop up, or, you know, exit too early because we're all fiercely protective of the gains that we are seeing in our portfolio right now. So I think that's a different kind of risk, but I think it's also present. Okay, let's talk about ways to play, since we're all reasonably confident in this. I say by joke, reasonably confident in this market. Let's talk about ways to play. So I know that this team isn't one that's usually focused on like low risk gold options, like major producers, royalty companies and whatnot. But there are other panels that you listen to, you know, who have the Frank Holmes and his sorts on them. When you ask them for their first pick in a gold environment, they all say Franco-Nevada. So I'm just curious, all of your take on that answer and on what to do with that range of options. Whoever wants to go.
I'll take it. On the more conservative side, I like staying with the royalty models. The two I like are EMX and Ely Gold. Those two are exceptionally priced at low levels right now. I think with an increase in the gold price, those are both going to do very, very well. Of course, EMX has that war chest of cash in excess of $60 million. Ely Gold just keeps, you know, making one deal after another. Their cash position is increasing, their stock position is increasing. But, you know, I know Eric and I, we're exploration guys. You know, we like to go, it's the treasure hunt. I love the treasure hunt. I like going out in the field and checking things out, and, you know, the ones that get real exciting. And, hey, you try to get 10 of these things, knowing that you'll lose on a couple, you'll make 2-3x on a couple will spin their reels, but 1 or 2 will go 10x or better. Yeah. That's the model I follow.
I love that Greg managed to choose like the 2 highest risk options in the royalty space as his choices for low risk exposure to the space. But that's what he did with Ely and EMX, which is by choice. Yeah, by choice. That clearly underlines his response to the question. Any other comments on?
You know, a royalty company has no operating costs except for management overhead, and the cash flow multiple is just going to be a function of the rising gold price. So there's really no leverage in owning a gold royalty company. However, with an operating company, with you know, gold prices, you know, even $1,500 gold, that's a couple $100 higher than $1,251, which is $400 gold in 1980, inflation adjusted to the present. So the leverage is with the expanding profit margin, and the fact that the market likes to price things in terms of cash flow multiples. So I wouldn't really be, if I was bullish about gold, especially maybe just a few $100 more, I'd be more looking at the producers than the royalty companies.
Fair enough.
Yeah, no, I'd agree with that. I don't have any problem with royalty companies, but I sort of agree with John's reasoning that at one level they don't have a huge amount of leverage, simply because the market loves them so much, they're already trading it.
They're already expensive.
They're crazy. Like most of the major royalty companies, the multiples they traded are nuts, really. I mean, they really are. I mean, but who cares? If they keep going up, they keep going up. I mean, because there's just so many really big, and like, talk about Frank, guys that run funds, that's what they buy. Part of the reason why I don't cover companies like that is the simple reason that there's so many house analysts covering it. Like, what am I going to say that you're not going to read in 80 other places? I'm not going to add anything to the conversation by following them, so don't bother. I would kind of agree with John with the producer developer. I mean, I've got several developers on the list and subscribers that are wondering why they haven't been taken out yet, but normally the way the math works with this stuff, because producers do have that leverage, if the gold price goes from $1,250 to $1,500 to $1,600 to $1,700, they tend to have fairly large percentage increases in their own share price. And just the psychology of the boardroom, those companies tend to wait until their own stock has gone up 3 or 4 or 500%, because the higher their stock goes, the easier it is for them to justify to themselves that, well, we only have to issue X million shares to take over this company. I mean, yes, usually at the same time the company that they're looking at has gone up 300 or 400%. The math generally doesn't make a lot of sense, but that's just
still how it goes.
They always do the same thing, like they always do. They always buy the stuff at the top. So while I'm expecting some M&A, I wouldn't expect it to kick in immediately. It'll probably take a few months and a little higher price before you see it. But developers are good ones, and I think companies where you're comfortable with the execution that are going into production, and one that a couple of us follow, Minera Alamos, that was on my panel yesterday. Companies like that I think are a great choice because they did all of their economics at $1,250, gold's at $1,500. There's no reason, as long as those guys don't mess up and the execution works, there's no reason that stock shouldn't go up 3 or 4 or 5 times in the next couple of years. I mean, that's just what should happen.
You brought up a few points here that relate to questions that I was going to ask. So let's go down the M&A path a little bit. One thing that I think is interesting is that the Australians are already there, right? Australian producers have seen their share prices go up 3 or 4 times. They already have the war chest to go out and be doing the acquisitions, and they're already doing it. Gold producers are competitive. There aren't that many assets out there that are the ones that they all want. Is that factor going to bring M&A forward?
I do know, I know that, I'm often in a position where I know things I can't talk about, but I mean, I know 3 or 4 companies on my list that have sort of, assets that are just still exploration assets, for instance, where there are 2 or 3 Aussie companies looking at them. Interestingly, one of the guys at our dinner last night is a guy I've met a couple of times out of Australia. He's a big mining contractor. He knows everybody in that space. And he told me, he said, as an Australian, I don't understand why all of those guys weren't here 2 years ago. He said it was a total no-brainer to me that they should have been over here, because he said, frankly,
getting ahead of everyone else.
Yeah, because he said they had basically the same assets as the North American companies and 4 times the price. Why wouldn't you come over and just buy the shit out of everything? And he said none of them did. And he said, I don't know why not. It made no sense to me.
Anybody else have comments on M&A and whether that's, whether there's ways to play it, whether you think it's soon, whether you think the M&A cycle is going to be different this time than it was? Obviously, the last gold market the M&A was characterized by go big or go home, and it was focused on growing production rather than profit, which didn't work out super well. So yeah, just sort of perspectives on the M&A space and what that makes you think in terms of how you're structuring a portfolio.
The few projects that are available that way, I think the majors will have to fight over the highest quality ones. And so I see a bidding war that would take place in a much bigger scenario than we've seen in some past cycles. They're desperate. You get a good big discovery in the right jurisdiction with infrastructure. Let's take Great Bear. Sorry about that. Great Bear Resources. They're still
never heard of them. Yeah, I don't know who they are.
They're still exploring. They haven't even been drilling to build ounces yet, and they keep hitting multiple zones and now 2 different styles of mineralization. So, I just think in that camp with that infrastructure, the majors will will fight over it. And it'll take the stock much higher than it probably deserves, but there's a valuation out there at some point, I think, for any situation like that. You know, where's the line in the sand? You know, 2 million ounces. That was the kind of where the line was, but you know,
Yeah.
how many projects are out there that are greater than 2-3 million ounces?
Yeah.
I think that comment you made was actually, that really factors in the M&A too. I mean, if you don't follow the majors, you may not be aware of, coming out of 2012, you know, through to 2016, I mean, how many C-suites got blown
Oh, they got
out?
completely annihilated.
Like everybody, like so many people got fired for buying crap at the top of the market that
Paying
it's
so
kind of
much for
yeah,
it.
it's kind of understandable these guys aren't like jumping in with both feet right away, because it's like, well, I got the job because the last guy got his ass fired for doing this.
For buying too many things.
Yeah, I'll just wait for a while and see how things pan out.
No, it's true. Absolutely.
You know, I think we're now in a sort of a real price, new real price for gold. And as it sort of marches higher, I think Eric alluded to this, the undeveloped companies that have some sort of ounces in the ground, when you start lowering the cutoff grade in response to higher real prices, you can grow ounces and you can also justify exploration. So it is possible that the bigger guys may, if they become convinced that there is a real uptrend in the price of gold, could take out companies at an earlier stage than before, and they don't have to have blown $50 million getting to the PFS level. So that could be a surprise, which is different from the earlier cycle that could benefit us a lot.
Talking about gold prices and changing, growing resources, because you're changing your cutoff grades and your economics, brings me to optionality. Certainly when the gold market changed in 2016, that's a trade that I got left behind on, because I inherently like projects that actually make sense, that where I can see a mine existing down the road at some point. But I got completely left behind on the optionality trade because a lot of people flowed into this idea of buying companies that had a lot of ounces, whether those ounces made, you know, a lot of sense or not. How do we feel about optionality right now? I mean, I'm not talking about the Western Copper and Gold, where that's a real deposit that also has you know, has the optionality aspect because it's really big. I'm talking about companies, assets that require 1,500 or more before they make sense. Are we going to see dollars flow into that? Is that always going to be part of a big gold market because there's so few places to shove dollars in our tiny space? Sort of, how do we feel about optionality in this market?
I think optionality.
He's trying to be careful.
Optionality is the, you know, it's kind of the last refuge of the generalist, I think. I mean, I can think of 2 or 3 or 4 quite well-known companies where, you know, it's true, man. If you bought any of those going into one of those big runs, the gains were large. The deposits suck, but they're big. And hedge fund guys in New York who don't know any better, and almost without exception, they almost don't know any better. They're moving a lot of money and a lot of paper. And those guys too, I mean, they're hedge fund guys. They're not buying it to, it's not a Rip Van Winkle stock for them. They're not gonna put it in a drawer for 40 years. They're gonna be out in 6 months anyway, so they don't really care. They're just riding the momentum. There's a great argument to be made for riding the momentum with optionality stocks. I mean, I'm the same as you, Gwen. I mean, I just get, you know, I own a few Rip Van Winkle stocks, and they have still been woken up yet, and I'm not entirely sure they're ever coming out of the coma. So I've kind of shifted to preferring ones where I can look at this and go, yeah, this project makes sense to me. I recognize because it makes sense, it's already going to have some price in it, which means it's not going to have, you know, the potential percentage move of, you know, company X that won't work unless it's $2,500 gold. But on the other hand, I can buy it at $1 and be fairly comfortable if something goes sideways next month and the gold price drops $200. Yeah, it might drop from $1 to 80 cents. That one that makes sense at 2,500 is going back to 20 cents because it just makes no sense unless you're just riding momentum. So I'm the same. I'd rather have the comfort of at least knowing it makes sense. And I just don't want to really, honestly, I don't really want to encourage the investment community to spend $10 million drilling deposits that are effectively...
geochemical anomalies.
They're effectively hard rock soil anomalies. It's
Yeah.
like, yeah, whatever, have fun.
Yeah. An interesting comment, though, about riding the momentum and that being a real force in the market.
Oh, yeah.
More to add on optionality, or do you just want to not touch that subject because you don't like them?
No, I think, one of my picks is Midas Gold, and, based on the PFS, this thing should not go into production at a price below $1,600. So right now, it's sort of priced, 70, 80 cents, hasn't responded at all yet to the move in gold. But if gold gets into that $1,600 to $1,900 range, all of a sudden, that company is in play, even though they're sort of stuck in this permitting cycle where they seem to come up with one more roadblock after another. So I think those are probably, if you're confident that, not in the style of Jordan this morning, that gold's going to crap out back to 1350, those type of optionality plays are in a sweet spot right now, where a 78 center like Midas, which would produce over 300,000 ounces a year, and possibly within a year and a half be construction ready, that could be a $2, $3 stock. And then if we get the insanity of, 2,000 to 3,000, which I think is actually a reality in the next couple of years, well, then you're talking $10, $20
Right.
type of numbers.
There's real gains to be made from these,
The key is
as
the low
this
inflation environment that we have right now. We actually had a lot of mining cost inflation during that
That's true.
2005 to 2010 period, which destroyed a lot of
The price increase didn't really help them any.
Yeah, the costs went up just as well as just right alongside the price of gold, but we shouldn't have that. Doesn't look like we're going to have that in this cycle as much. No. Any more comments, Greg?
I'm just looking at this I'm looking at silver stocks right now, and some of these have been bludgeoned so bad and had great assets, but, over the long downturn, their share structures got really, really diluted. They were just trying to survive. Some of them still are intact, and I think they're at a pretty low price, and so based on ounces, there could be quite a good upside for some of those plays.
Silver brings me to my next question. I have a couple more here. Lots of talk out there right now about silver. The silver gold ratio has come down from the peak that it hit. I think it's down to sort of like 82, I think was the number that I saw recently. But if you look over recent gold bull markets, the average is more like 66 to 1. So is the classic... Silver has done a catch-up already. Is there more silver upside in the near term? What are our outlooks for silver?
Silver is sort of the poor man's gold. I'm not a silver bug.
Really?
Yeah,
But from that start, I so thought you were.
Yeah, I know. It's not. I don't hate silver. That's not a thing. That's fake news. But I'm not a silver bug. For instance, every silver bug I know gets in my face about like the 50 to 1 ratio, which it was there by fiat 50 years ago, but it's got nothing to do with anything. I don't understand why there's any reason why that should have to occur. It is true that ratio tends to tighten up when you have big rallies. I think partially because people expect the silver price to have bigger percentage moves, partially just I think because it's a smaller market, so the same kind of fund flows will move it farther. And silver bugs are crazy, so they love this stuff. When it starts moving, like the amount of don't get me wrong, I love all you guys. When it hit like $17, I got so much email from guys going like, see, it's real. Then I'm going, it's gone up $2. Like, calm down. But the truth of the matter is, they act on that. So, Greg's right. You find a good silver deal with a good share structure, silver goes up $5, the price will probably go crazy because
it's true.
When they get excited about that stuff, they really buy hard.
Right. The gold market creates its own momentum, but the silver market amplifies that.
Oh yeah. Like when those things start going, they do go. I'm looking around. I only have a couple of silver stocks on my list. It kind of has that same thing where I'd like to see the kind of grade where I'm comfortable at even at sort of today's prices that make sense.
Mm-hmm. Yeah.
Because there's a lot of 150 gram per ton Mexican things where I'm just going, it's not quite.
Yeah.
Anybody else on silver?
Well, talking about this, one of the biggest silver bugs, Eric Sprott. I had lunch with him And you want to talk about a silver bug? Let me tell you, he's buying anything and everything silver. I mean, he would be considered maybe towards that nuts category.
Oh. He spent 2 hours trying to convince me it was going to $100 in 2012, $100 an ounce. Like it's right around the corner.
Yeah, yeah. Okay. The one point I'll make too about silver is that I know that U.S. investors love silver. I don't know what it is, but whenever we talked about a silver play, the interest from U.S. investors was huge. And I don't know if that was just a reflection of my database, which at that point was like 13,000, Now we're down to 3,000. But, it just seemed like anything silver that was a good silver story in it, it always got the most attention of any of the stocks I ever covered.
So interesting.
I don't know what that's about, but I'm
Right.
just mentioning it.
I'd modify Eric's comment a bit where he says silver is the poor man's gold. It's really the religious man's gold.
Yeah.
And what Greg says too, United States is the most religious country in the Christian world. And silver, unlike gold, all of the gold that exists, all 6 billion ounces are technically for sale tomorrow, if they so wish. But most of the above ground gold stock, it's fabricated into something. So the actual silver float is much, much smaller. So if you have this religious frenzy come into the market, it can move the silver spot price in a way that, it takes trillions of dollars of new money to move gold significantly, but it takes a much smaller amount to move the silver market. Now the only problem is that the silver is a byproduct from all these base metal mines and even some gold mines, and they just start selling silver like crazy when the religious buying comes into the market and tends to make the rally short-lived. But I also agree with Eric that this ratio of gold to silver is now meaningless, but the market will still track that and use it to go in there. So I think when gold starts to rise, in percentage terms, silver will outperform, and I think the magic number is $20. If it can claw its way back over $20, then money will go into the silver stocks, and you'll get that leverage, the optionality. Companies like Kootenai Silver, right now the deposits are worthless, but at $20, all of a sudden you're in the money, and we're not that far from that crossover.
Let's broaden the discussion to a few more metals. It seems there's lots of reasons that it sort of doesn't make sense, but yet, looking back, it's still true that a precious metals market can encourage a base metals market to follow. Its interest in metal seems to spill over, even though they're dramatically different. It does seem to spill over. Is that a possibility right now, or are global growth concerns too much of an issue? The fundamentals for zinc are strong, the fundamentals for copper are strong. Does anybody have bullish outlooks for base metals, or do we need to get through this trade war situation and recession risk and all of that first? Can it be positive contagion?
I think we need to get through that first.
Yeah.
Historically, you would expect to see base metals move with precious metals. There's a lot of reasons for that. It's partially that, generally speaking, in past cycles, the inflationary conditions that created a negative interest rate environment meant there was an underlying growth rate that pulled base metals along with it. And in fact, some people would make the argument, my brother Dave always did, that gold bugs hate to hear this, but in some ways copper is actually a better inflation hedge than gold is, because the set of circumstances that generates inflation is identical to what generates copper demand.
Copper demand,
The problem right now is we're in this low inflation environment. The real interest rates aren't being created because central banks are behind a rising inflation curve. It's because they're shoving interest rates down. So it doesn't pretend the same kind of environment. And even though the U.S. is not the 800-pound gorilla by any means when it comes to base metal demand, not at all. But the fact remains that a lot of the people that move the money around and trade this stuff are U.S. based, and as long as if they're concerned that the economy might be rolling over, I don't see them putting in a bid. And we already know, Europe's teetering on the edge of inflation, of a recession. China I mean, China, just because of the way they do their numbers, you're never going to see a zero growth rate, but it's been falling off, and in their terms, they get down to like 4%. That is a recession. You know, until you see that clarified a little bit, even though medium long term, the supply-demand equation is fantastic for base metals, especially copper. Copper, there's a really large deficit out on the horizon, but I don't see a reason why you have to chase that stuff right now. I'd like to say otherwise because I own a
I'd love
copper
to
and
as
zinc
well.
stock, but there it is.
In the first decade of this century, we had gold and base metals trending higher because of a prosperity cycle, global GDP expanding as a result of China coming on stream, and we had a weakening dollar. Right now, the global economy growth is slowing. There's all these recession indicators. There is no alternative to the US dollar, so it's not really in a position to decline against anything. I don't think the trade war situation is going to be resolved. I think there's a crisis coming. Trump wants to be re-elected. The one promise he hasn't kept is infrastructure renewal. He hasn't really had permission from the fiscal scolds in the Republican Party to go and expand the debt, but the debt's now at a deficit's at $1 trillion in total debt at $22 trillion, and they've come around to not caring about this anymore. So when we get this crisis, say a pullback in the general market and all indications suggesting a global economic downturn, and interest rates at zero and doing nothing, monetary policy is basically wiped out, then you're going to see the button pushed to start rebuilding countries, and Germany's in the same boat. They are in danger of going back to a Nazi past because their economy is stalling and people are feeling left behind. So
And they actually have money.
Well, yeah, they're the ones that have negative interest rates.
Yeah.
But when these German savers are told, we are now going to start deducting money from your savings deposits, they're not going to like that very much. So Germany will have to go, and their infrastructure has been to some degree neglected since the reunification sucked up so much resources. So they need to do it just as much as America. So if we get this infrastructure boom happening, that of course will make gold go higher because of the extra debt being piled on, but it'll also give us strength in the base metals and the raw material markets, because we'll need a lot more of that, because everything's sort of geared towards kind of like a slowing global economy right now.
That's an interest. Yeah, that's a good perspective.
You know, I look at, I always like looking at old cycles. The last big cycle we had, 2001 to 2007, you know, it started out precious metals oriented. And at that time, the mining stocks got ahead of the precious metal prices. But in the end, it morphed into a commodities bull market. And we went through all the commodities, even uranium. All of a sudden, we had a uranium bull market in that period. So it seems like what happens is, you know, I'm looking at it this time, precious metals is definitely the focus right now, but you know, you go up to Beaver Creek and people are still talking copper and other commodities, and you just don't know if a fund manager is going to be interested by that until they sit down and actually talk to the people. And you know, copper, in my view, is there's always room for a big new copper discovery, you know, and there's plenty of money to be made no matter what's going on in the world. So.
Absolutely, yeah. Okay. I was sort of going through options for how to play the space. We got distracted on all kinds of other questions. But going back, if we get back to what's sort of the meat and potatoes here, which is more the exploration end of things, for the last few years, it's truly been only the best of the best of the best that performed, right? You had to have everything, the management, the share structure, the access to capital, the amazing project, the right results, all of that. Is that still what you require? So it sounds like a bit of a bad question, like, are you only going to buy good companies? But has your window opened somewhat? Do you think that as the gold market strengthens, do you play a wider range of projects? Or do you keep yourself closed to just the best of the best? And I guess that question also relates then to your portfolio. You know, do you prefer a smaller portfolio that's focused on a few projects that you really have hand selected as the very best, or do you like, in a rising market, to have more options on the table to take advantage?
I'm probably buying more things. I mean, you know, at a general level, I would say, yeah, obviously, I mean, I always want to be focused on what I think at a given moment are the best of the best. I mean, that's what anybody should do.
Sure.
In their portfolio. And of course, when you're dealing with exploration stocks, you know, today's hot story is tomorrow's duster. That's the game that you're playing, and nobody should have any illusions. I mean, Mother Nature doesn't always give up her treasures easily. Sometimes you win, sometimes you get slapped upside the head. That's just how it is when you play exploration stocks. That does speak to the logic of, at one level, that speaks to the logic of having a wider list, because, you know, in one sense, you sort of have to play the odds. I think if you're willing to trade things this way, it's difficult to deal with stocks like this, or at least for me anyway, in the newsletter this way, but if you're in a real bull market for exploration stocks, it does generally give you the ability, if you can get access to financings, to buy early stage stuff cheap, where, you know, maybe it's not the absolute A team. And you know, the truth is the A team is sometimes defined by luck. I mean, there is luck involved in exploration, even for the greatest explorationists. So sometimes somebody's a great explorationist because they got lucky. And I don't mean that as a negative. I'm just saying, you know, just because somebody hasn't found a mine yet doesn't mean that the project they're standing on won't be that project. I mean, that's exploration. So I mean, you know, good, strong teams with projects that look good. What a bull market allows you to do, hopefully, is if it's got enough legs, you can get in on some of the early stage financings and you play it smart. And by that I mean you let your boat rise with the tide, and hopefully by the time you're 4 months out, the stock is 50 or 75 or 100% higher, and you take some money off the table. You keep your warrant. You've essentially got a relatively cheap ride on something, and you can broaden the scope and the size of your portfolio doing that. I mean, I tend to have a few things that I focus on that have most of my money, but I do have the list of the stocks that I own is lengthening, just because it's one of those markets where, yeah, I'm gonna buy more stuff. I've never been a big fan of going, yeah, everything's gonna go up 100%, so I'll just buy anything and turn around and flip it out. I mean, I prefer to buy stuff where I'm gonna be focusing on the company. So
Yeah.
I guess, yeah, the short answer is yes, you go a little bit down the quality scale, but it's because I'm hoping the company I'm buying is going to become one of those A-lists, not because I'm willing to just buy anything. And the truth of the matter is, as we will rapidly shift and this happens in any bull market for these kind of stocks, we'll rapidly shift to the point where the offers that companies are willing to make to investors get worse and worse.
Yeah.
You know, the warrants become half warrants, the half warrants become no warrants. The 10% discount becomes at market to 10% over market, blah, blah, you know. So there is some logic to trying to, if you're willing to, if you accept the risk to moving early in one of these cycles, because the simple truth is early in the cycle, you get a better deal on the placement, pure and simple.
So potentially buy more now,
Yeah.
because the window, things will be more expensive later.
You know, that whole best of the best thing evolved out of just pure survival the last 7 years. You know?
Yeah.
I think we're all banging our heads
The
against
Hunger
the wall,
Games.
bleeding profusely, and if we're going to be in this space, you know, you gotta defend yourself there. But no, I agree with Eric that, you know, as a bull market takes off, you know, people ask me, well, Greg, I missed that Great Bear. Oh, don't worry, with what's coming, another bus is coming into the terminal, right? At a low price, with a good team, with a, you know, blah, blah, blah. So you tend to, and again, Eric mentioned this, you tend to expand what you were thinking in the survival mode, because there does seem to be a lot of attractive new projects. And that's the case with me at this conference. I am attracted to a lot of new projects right now. And they're good projects. And when they have the precious metals upside that I'm looking for in a treasure hunt that looks very exciting, and then I get excited. I want to be part of it. So,
Getting excited is the thing for all of us, isn't it?
yeah.
The problem with the best of the best, especially in the 8th year of a resource junior bear market, is that they will have a much higher price than the rest of the best. And that means to get bigger gains, we need some sort of trend to continue. In the case of, say, a Great Bear, we need the discovery trend to continue. And it may not quite pan out as everybody expects, but if you get this, major new district, high-grade district, and this thing becomes a, $50 to $100 stock, well, you may have missed that, but that has the optics that restore faith in the sector. And if it's in the backdrop of a rising gold price, well, even better. So I'm now looking at the companies that may not have all the pieces together, but there's management teams in place that know what to do when the wind is in their back rather than in their face, that have projects that have exploration potential and maybe even optionality potential. And it's in that sort of lagged turning point. I mean, this market is not yet reflecting the bullishness that we're talking about, except maybe in a few stocks that Eric Sprott with his $200 million spending binge has helped crank up. And so it is a sweet spot for those of you who are paying attention. You got to look at the big macro stuff. You got to watch the great bears, even if you're afraid to buy it at $8. Watch it very closely, because this would be like the Gold Corp from that 1998 to 2002 period, which spawned all kinds of Me Too hopes. So yeah, best of the best isn't necessarily where you should put your money. Now you might even consider selling them and recycling into the ones that will start to move with much greater percentage gains than if the big ones continue to move. And like I'm expecting 300 to 500% repricing in the sort of 400 companies that are still okay on the venture exchange, and then start growing to track whatever the gold price. This is how badly discounted this space is, and the market has not yet responded because it does not believe this gold rally is real, that we are out of this doghouse that we've been in for 8 years.
I love this guy. Don't you?
Yes.
One smart thing too that John said that's worth repeating, and this is going to be considered slightly sacrilegious, but usually whenever you're at these conferences, you're doing what's the most important thing? Management. And there's a lot of truth to that, obviously. People that are more skilled at exploration, better at raising money, higher stature, blah, blah, blah. I mean, obviously that is important. I mean, they got to have that stature for a reason. But one thing that, Dave and I always said in the past that was frowned upon, I suppose, was that when you get into one of these markets, you inevitably will get to the point where well-known management teams will put deals together that, that are okay. They're okay deals. I mean, they've got the kind of names where they can attract big name projects that have been around for a while, and they're expensive, and you need that ability to be a magnet for money to be able to pull those projects in. But, more often than not, as much as I like the people involved, I find those kind of things tend to be overvalued right out of the gate. They ask you to pay far too much for their reputation.
Yeah.
And as much as I like those people, I would urge you to be, to try to have a jaundiced eye in the next year or two as those things roll out, where, it's this person and that person, she was involved with this and he was involved with that, and it gets rolled out with a 300 or 400 million capitalization. And, the brokers love brand name stuff, funds love that stuff, and they can usually do those placements. They'll get the money. But I'm always a little careful with those, because really, once you get into the cycle, they tend to get way overpriced when they come out.
And we've already seen some of those for sure. I've had a few offers already for deals where you're like, and what's that being valued at with what project? So yeah, it's interesting that that's already happening. Yeah. And I definitely agree with John I have been open in my letter that I don't hold all the Great Bear shares that I once held, and I sold them to buy into financings of inexpensive companies that have happened in the last few months. And, I sold it between $5 and $6, so obviously I have lost some upside on that, but I'm hoping that the financings that I bought into that were often at 10 or 20 or even 40 cents, that those have multiples within them. So, this is the relative appreciation potential game that we all play, and I think that is why my window opens a little bit more. Also, things like the fact that I missed the optionality idea remind me that I don't know everything. I mean, I know that all the time, but you don't see everything, and so you should be open to other ideas, because in a rising market, a lot more investors are involved, and everybody has their thing that they like. So people like optionality, people like quick to production, people like royalty companies, people have all their different baskets, and the more people there are, then there's money going into all of those baskets. So don't just choose the one basket that you've always played in.
Yeah. I mean, one other thing we should watch is what are the funds doing? What are they going to do? Because they control, they're such a big driver in our market. So next week in Beaver Creek, we're going to get to talk to these people and find out what their appetite is. You know, they were bludgeoned, they were reckless in the 2001, 2007 period. I mean, just completely stupid with the money they were throwing around. And, you know, I can remember, you know, going to these parties where, you know, the bills are in the hundreds of thousands of dollars for open bars and, you know, I mean, just craziness, right?
It's like
all this wasted money, right? So, you know, what are they doing? They were bludgeoned, and then in the last few years, they're taking that mentality of high quality. That's what they've been focused on now. Once things loosen up, is the money going to flow again? Maybe not as reckless as in the past, but
We'll get there.
yeah.
It's only really recently that gold funds, for instance, are seeing any kind of significant inflow. I mean, even 3 months ago, 6 months ago,
Yeah.
Nothing.
those guys weren't buying places because they didn't have any money.
Yeah.
I mean, they were sitting on stuff that they'd been sitting on for years, waiting for it to do something, and they weren't getting inflows. I mean, they didn't have any cash, but I think that's changing pretty fast.
Okay, we're near, oh, sorry, go ahead.
I'd like to sort of ask a question related to this. How many people here, put up your hands, and are sitting on a huge pile of cash trying to figure out which of these juniors to put it in? So this audience that is still here has all
The rest of you can leave.
favorites. The liquidity.
Sorry, go ahead.
We need liquidity events, and so it's kind of frustrating that we're stuck in our favorites and you can't really sell them, especially if you have a meaningful position. But this is still a very good time to make a wish list because it's new money coming into this space that's going to create the liquidity for the ones that you are already in, as like Gwen was saying, with selling off this Great Bear as people pile into that and start looking around. So even though you're paralyzed in the ability to do something, now is the time to make your wish list, because this market will be like a popcorn pan. The little things will start to pop one by one, and then a little more. And then when the frenzy starts, of course, then it's too late. But right now we're seeing the individual pops happening, and now you should be trying to figure which of those kernels are going to be in that sort of next stage.
That's a great
of popping.
analogy.
I know, that's a great analogy.
I'm
I was
stealing
just,
that one.
yeah.
Yeah.
We're all going to write about that next week.
Totally.
Okay, classic final question for the panel. I kind of want to I should ask, what stock would you buy today? But that obviously requires, so it's two questions. What stock would you buy today? That requires probably one where it's not Great Bear already, or maybe it is. But anyways, lower valuation, what would you buy right now? And sort of what stock are you in love with? Maybe they're the same. Yeah. And they can be here, they cannot be here. I'm actually going to let you make that decision on your own. I will go first. When I was thinking about it just now, I was thinking about the companies that were here, so both of mine are from right here. The one that I'm sort of most excited about, I think, is High Gold. Not available to buy as yet, because we'll start trading shortly. This is the spin out from Constantine. I just think it has the ingredients. It's just lined up. It's got this really interesting high grade, SK feeder style asset in Alaska that is going to produce some really exciting drill intercepts right off the bat. I think the structure's good. I think the shareholders who are in are fantastic. So and they've got a lot of money, enough money to do a bunch of work immediately. And then as a buy right now, perhaps Integra. I think with the value crystallization that is going to happen over the next 6 to 8 months and longer, in lockstep with a market where generalist money is arriving and looking for exactly that kind of asset. I think that it's pretty well set up to perform right here. So those are my two. Greg, Eric's been able to answer first every time, so I'll let you preempt him.
Out of this show, I've been introduced to a lot of new stories this show, and the one I'm most excited about is this Libero. That one really has my attention. I like Leo. He's Ross Beatty's guy, and when Leo says go and he's excited about something, you better pay attention. So I really like that one. I'll be buying it myself, and that one's Libero.
Libero, LBC is the ticker symbol. Libero, copper, and gold. I had introduced it as Libero Copper, but they recently added the and gold because now they have a gold-focused project. John, which one did you want to highlight?
I'm going to limit it to companies here and ones that aren't already part of my recommendation portfolio. So a couple people told me, you need to go check out this Osino Resources Corporation, and so I did. I spent some time with Hayadon and was really impressed by what they are doing in Namibia. And because I'm in that camp of undercover exploration, that big stuff is going to be found where nobody has ever looked before because it's all obscure and covered with something. They've developed a technique for sampling the upper part of the calcrete layer buried under the sand in Namibia. And it turns out that when there's gold in the mineralization in the bedrock below and it gets mobilized by water, for some reason it sticks to the top of this calcrete thing. So they actually do a sort of, it's similar to that hydrogeochemistry stuff of Nevada exploration, except they're drilling into the calcrete, through shallow gravel cover and whatnot, sampling it and identifying fertile structures underneath and then proceeding on that. And this has not been done in Namibia. The Australians have been doing it in Australia. So here's a company that has figured this out and picked up all this land position, and it's drilled it and confirmed, yeah, we have a mineralized structure here. So it's doubled in recent weeks, but it is the kind of story where they might not just have 1 to 2 million 1 gram plus type open pitable deposit, but there could be multiple ones. So that would be the one that I would pick at this show.
Okay.
Eric, last
I'm
but
going
not
to do
least.
several because I can, and it's my show. I haven't actually talked. I actually have to get over and talk to Sino because the fact John and Joe both like it a lot is reason enough for me to take it pretty seriously, even sight unseen, quite honestly. But I did talk to him last night at the dinner, and I was quite impressed with him. I just haven't had a chance to actually look at it, but it sounded pretty damn interesting. So I'm definitely going to be looking hard at that one. Great Bear's $8. It's not going to be for the faint of heart, and I totally understand if anybody is afraid of buying it at that level. My average, I have averaged up. My average cost is still really far below that, but it does. It's one of those ones you can wait for a couple more drill releases. But if what they think is going on at LP is going on, the stock's still going to go a fair amount higher. It's going to be very large. So, and I think it's one you need to watch as a bellwether, even if you don't feel like buying it at this price. I'm a big fan of high gold as well, but you took that one, so that's fine. I'm just seconding you on that one. I like Darwin a lot, and I like their projects a lot. One that's not here that my readers know I'm a big fan of, I own a lot of it, is a company called Northern Shield. They've been at a couple of myths. It's, a lot of people think things have been going really slowly for them, but they really haven't. They found the first evidence of an epithermal system in outcrop like a year ago, literally 1 year ago. It was less than a year, actually. It was November myth. It was right before, like the day before that they found the first outcrop. It's a really large system in Nova Scotia. These things aren't supposed to be there. A very smart prospector found it and convinced Ian and Christine that he wasn't delusional. And really all they had was a couple of rocks about the size of my fist and some stream anomalies. They had nothing in outcrop. But in the course of this field season, which is still open, there isn't much seasonality issue there. They've got to the point of showing they appear to be near the top of a very large, low sulfidation epithermal system. And it is very large. Trust me, when you're talking 5 kilometers and it's still open, that's a damn large epithermal system. The way these things work, you wouldn't expect to get a lot at surface because they're too high in the system. They're getting about 1 gram all over the place in veins. They are, I think, going to bite the bullet and drill it probably next month. And the market just tends to react more to drill results. So, I mean, you've got the inherent danger anyone's going to have when it comes to doing the first drill program. But I think that project, plus they have another up at their own project in Newfoundland that also looks really good, where they do in fact have high grade on surface already. It's got a terrible share structure. Ian could never convince his board to roll back. I would have been fine with it. Lots of shareholders would have been, but they never did it. So it's got way too much stock out. But at the end of the day, it doesn't matter if they find something that's going to go higher. I really like that one as a discovery story.
And that, my friends, is it. So we're going to do the thing you're all